Welcome back to the Deep Dive. Today we're jumping into, well, what I think is one of the most fascinating intersections in finance right now.
Definitely.
It's where, the bedrock of community banking credit unions meets the cutting edge, really, of decentralized finance.
Yeah.
Specifically stablecoins.
Right. And this isn't just talk, is it? It's a real, concrete, strategic alliance we're looking at.
Exactly.
So our mission today is basically to unpack this announcement from October 9th, 2025. It details a pretty big partnership between the Cornerstone League and the blockchain firm Metallicus.
Right.
We need to get past the press release language, understand what this really means for potentially hundreds of established financial institutions looking to get into digital assets, but crucially, without all the risk and regulatory headaches.
Yeah, without the risk part is key. We're pulling everything straight from this collaboration announcement today. And it lays out a really interesting model suggesting these places can genuinely, dip their toes in the water. But I think that phrase they use, zero risk test environment, that really deserves a closer look on its own.
Oh, absolutely. And to grasp the opportunity here, you first have to understand the players involved, the scale.
Okay.
So on the institutional side, you've got the Cornerstone League, and this isn't some small group. They're one of the nation's biggest regional credit union trade associations.
Huge reach.
Massive. We're talking over 600 credit unions. Think about that. Across 5 states. Arkansas, Kansas, Missouri, Oklahoma, and Texas. A huge footprint.
Wow. Okay. 600 plus. That kind of collective move, well, regulators definitely notice that.
They have to. And then on the technology side, there's Metallicus. They're the core developers behind the Metal blockchain.
And Metal blockchain, just to be clear, we're not talking about something like Ethereum or Bitcoin here, are we? This isn't a public free-for-all.
That's a really important distinction, yeah. Think of Metal blockchain more like a highly secure permissioned infrastructure, like a private railway built just for banks and credit unions.
All right.
It's designed specifically for those institutional needs, speed, security, compliance, right from the start.
Got it. So the immediate goal of this partnership then, the ask, as you might say, is to give all those Cornerstone League members access to the Metallicus Stablecoin Pilot.
Exactly. And this isn't just reading manuals, it's actual operational prep.
Hands-on.
Hands-on. And the way it's managed is quite smart. Through their internal structure, the actual deal is handled by Cornerstone Resources.
Okay, who are they?
They're a wholly owned subsidiary of the league itself, sort of the solutions arm, the ones who vet these kinds of partnerships.
Right.
And Ryan Dold, he's the EVP and Chief Revenue Officer there. He really captured the challenge, didn't he? He said their job is helping credit unions stay ahead of emerging technologies while protecting their members and their mission.
That quote really stands out. It perfectly frames that tension, that central conflict. How do you innovate, potentially quite radically, while still holding on to that core member trust?
Precisely. Which brings us straight to the main event here, the Stablecoin Pilot Program itself.
The sandbox. Yes, it's specifically designed to answer that very question by creating this controlled sandbox. It's not just about testing the tech. It's almost like piloting a regulatory strategy alongside it.
Okay, let's zoom in on this sandbox idea, because this feels like the core innovation for, any credit union folks listening, or frankly for you, the listener, just trying to figure out how traditional institutions even approach this volatile space. The announcement is really specific about it being zero risk.
And they mean zero risk quite literally here. The whole thing runs like a sophisticated simulation. They stress no member funds.
Right.
No live crypto assets are needed at all. So the credit unions are basically using this crypto-free test environment. It has simulated reserves, simulated controls. It perfectly mirrors what a future live rollout would look like.
But without putting a single real dollar at risk from crypto volatility or, importantly, custody issues.
Exactly. That's huge. They avoid the custody risk entirely in this phase. That's fascinating. So they get to prove they're ready, operationally ready, prove to regulators the plumbing works, essentially.
Right.
Without the kind of exposure that, has really tripped up some early crypto adopters. This feels designed to sort of leapfrog years of potential regulatory friction.
I think that's the goal. They get all the benefits of stress testing, the actual mechanics, the operations, but crucially, they sidestep the liability that comes with holding digital assets. The credit union doesn't need the keys, doesn't need the real tokens during testing.
Maximize learning, minimize exposure.
Yeah.
Sounds invaluable.
It really is.
So what are they actually learning in there? It's not just pushing buttons, presumably.
No. Participants can test proper payment flows, complex ones,
Yeah.
internal transfers. And this is really interesting. Credit union to credit union tests on a shared test network.
Oh, wow. Okay.
And they can also issue their own custom branded stablecoin.
Custom branded. Why is that bit important? That signals something specific?
I think it signals a degree of regulatory autonomy, or at least the path towards it. It tells regulators, potentially, that the credit union isn't just using some third-party coin they don't control.
Right.
They're learning how to issue and manage their own compliant digital asset, one that's tailored to their specific internal rules and compliance setup.
That sounds like a powerful way to maintain member trust, too.
Yeah.
If the coin literally has the credit union's name on it,
Absolutely.
it reinforces that existing relationship. It's not some scary, unknown crypto thing.
Completely. And one last point on the sandbox that makes this whole deal so accessible. Cornerstone League members get to participate in this pilot at no cost.
No cost.
Really. That's what the source says. It's positioned as a member benefit, which, removes a massive barrier, especially for smaller institutions that might not have big R&D budgets.
Wow. Yeah, eliminating that financial barrier is a huge strategic move. Okay, so the pilot is like the front door.
Yeah.
But it leads into a bigger structure, right?
Yeah.
This whole thing sits under the wider Metal Blockchain Banking Innovation Program.
Exactly. And this is where you see Metallicus isn't just about stablecoins. They're thinking about the whole suite of infrastructure needed by institutions. The innovation program is basically the toolkit.
The full toolkit.
Right, designed to help credit unions safely evaluate and maybe adopt various blockchain solutions, not just stablecoins.
So what else is in that toolkit? Beyond the sandbox, what other maybe operational pain points does it address?
Well, you see tools aimed at modernizing things they already do. Tools for better fraud prevention, digital identity solutions, which are becoming absolutely critical, and just general tools for operational efficiency. They even mention support for private blockchains, maybe for internal record keeping.
Okay, lots there. But the piece that really jumps out, especially thinking about how banks work today, is the crypto as a service API. That sounds like it needs some unpacking.
It really does, because, look, for years, traditional banks and credit unions have had this problem, right? Their members want to buy Bitcoin or other digital assets, and what happens? That money, those deposits, they leave the credit union. They flow out to Coinbase, Kraken, whatever exchange.
Deposit flight. A big headache for them.
A huge headache. So this API, how does it help? It basically acts as this compliant, ready-to-go bridge.
Okay.
It lets members buy, sell, even hold digital assets directly through their familiar credit union interface. The credit union stays the main financial relationship provider. And crucially, they get to retain the underlying customer deposits.
The money doesn't have to leave their system.
Exactly. It stays within the credit union's orbit.
That must offload a massive operational and, frankly, regulatory burden for the credit union itself, right? Building that kind of service from scratch would be immense.
Oh, absolutely. And that's the other key part. The API comes sort of preloaded with the essential compliance features baked right in.
Like what?
Institutional-grade custody solutions, full KYC ML, know your customer, anti-money laundering checks, and continuous transaction monitoring, all built in.
So the credit union essentially gets instant functionality. They can offer these services without having to build that entire compliance machine themselves.
Pretty much. They become a compliant on-ramp almost overnight, making them a secure, familiar gateway for their members into this new digital asset world.
That makes a lot of sense. But it does raise a big question. Why credit unions? Specifically, why are they the ones seemingly leading this charge here? I mean, we hear about big banks doing internal pilots, sure, but Cornerstone is organizing, 600 institutions across 5 states? What's the strategic edge for SVUs?
Yeah, it's a great question. And it's something Frank Massa at Metallicus, he's their director of blockchain for institutions and fintechs, directly addressed. He's quoted saying credit unions are uniquely positioned to lead in stablecoin adoption.
Uniquely positioned. Why?
Well, think about their structure. It's cooperative, right?
Yeah.
Member-focused. They're kind of inherently built for shared risk and shared benefits.
Okay.
Which makes a shared network infrastructure like Metal Blockchain is aiming to be for them a really natural fit.
So the cooperative model itself, being less purely profit-driven perhaps than big commercial banks, actually lets them adopt this potentially disruptive tech maybe faster. They don't have the same legacy systems or maybe the same competitive silos slowing them down.
That seems to be the core argument, yes. The analysis suggests their structure is an advantage here. Now, we should probably introduce a bit of, let's say, critical thinking here.
Okay.
While this custom permission private railroad, this metal blockchain, clearly solves immediate compliance and security needs for the CUs,
Yeah.
you do have to wonder, are they sacrificing something else? Like maybe long-term interoperability with the wider public crypto world?
That's a sharp point. They gain control and security within their walled garden,
Right.
but maybe lose seamless connection to innovation happening outside it. It's that classic trade-off, isn't it?
Yeah.
Control versus broader connectivity.
It is, but certainly from the perspective of Cornerstone Resources, going back to Ryan Dold's comments, the immediate focus is clearly on practical wins.
Right now, yeah.
Driving real operational efficiencies, delivering compliant solutions that solve current headaches for their members and the institutions themselves.
What sense?
And Metallicus, they were founded way back in 2015 by Marshall Hayner and Glenn Marion. Their whole approach seems built on bridging that gap, deep blockchain knowledge, combined with a focus on regulatory reality. They're catering very specifically to what regulated finance needs.
Okay, so wrapping this up then, what does this huge de-risk effort mean for you, the listener, watching finance transform?
I think the key takeaway is this partnership carves out a really practical, operational, and importantly, financially accessible path.
Mm-hmm.
A path for over 600 established institutions to move towards a digital asset future, but doing it in a way that puts compliance and member trust right at the forefront. It shifts it from high-risk speculation to structured, cooperative experimentation.
I agree. And think about the potential scale. If you have 600-plus credit unions successfully testing how to issue their own compliant digital assets, all within a shared test network,
Right.
Well, that stops looking like a small pilot.
Right.
It starts looking like a blueprint for how entire regional financial systems might actually leverage blockchain.
Which leads us perfectly into our final provocative thought for you to consider today. If credit unions across 5 major states, Arkansas, Kansas, Missouri, Oklahoma, Texas, if they successfully use these custom stablecoins and their shared network testing, prove they can do instant, super low-cost transfers between credit unions.
Yeah.
How might that fundamentally shake up the speed and cost of transfers across the entire traditional banking system? And maybe more personally, how soon might you find sending money from your bank to your neighbor's credit union is actually faster and cheaper than using something like Venmo?